Safe Crypto Show disclaimer. Please keep in mind at all times that we, the hosts and guests of the Safe Crypto Show, are not offering or giving investment advice. We only state our personal opinions and thoughts on our own interests. By watching, you agree to not hold us responsible for any losses you may incur by executing trades or by maintaining holds based upon the subjects discussed in our episodes. It is Friday, the 5th of October, 2018. Today I'm flying solo, so let's get straight into it. We've got a lot to cover today. Got a lot of interesting information. So start with the top 10 as usual. Of course, Bitcoin there at number 1. Ethereum 2, Ripple XRP 3, Bitcoin Cash 4, EOS 5, Stellar number 6, Litecoin 7, Tether number 8, Cardano 9, and Monero rounding out the top 10. It's been a pretty mild week. We haven't had much volatility. It's been good. We're seeing that volatility really tone right down. So we got the Bitcoin dominance at 52.1%. And, yeah, things are looking pretty normal there. Or, well, no, not normal. They're looking abnormally quiet. But we'll see if it lasts. I don't know. It seems to be a trend. Okay, let's have a look at the 7-day total market capitalization. You see, we started the week at around 220 billion, and we've ended the week at 219. So pretty much right where we started the week. We've had a fair bit of down. The bottom there looks like we got down to as low as around 214 billion, and a high back on Sunday of 226 billion. You can see the volume's kind of been tapering off during the week. The 24-hour volume, it's actually down pretty low at the moment. 10.7 billion. We started off the week at about 15 billion. So yeah, it's a pretty sizable taper, really. We'll see if that holds. That might indicate we're going to have a breakout of some sort in the near future. Okay, on to Blocktivity. And this week I want to cover a bit more information on Blocktivity about what they're measuring here and some interesting things that are coming to pass. But first, let's just go through the top 10. We've got BitShares at number 1, EOS 2, Steam 3, Ethereum 4, Bitcoin 5, Dash 6, Komodo 7, Waves 8, Ethereum Classic 9, and Kin at number 10. See, this week we've got currently Ethereum has 45,000, nearly 46,000 unconfirmed transactions. That's it's a bit lower than it was last week, I think, but it's par for the course. Ethereum is overloaded and continues to be overloaded, but doesn't seem to be pushing radically higher. It's maintaining a certain range of about 20 to 50,000 unconfirmed transactions. Now, what's interesting is this week, you can see right here, we look at Bitcoin at the moment is at 84.13% of utilization. Or these are averages, these are estimates, okay? So we're going to get into that in more detail. But earlier, I think yesterday when I checked on here, Bitcoin was actually over capacity again. And I don't know if that's happened more times during the past week or two, but it's reaching its capacity limit again, okay? And this is, I find this really interesting. I mean, Segregated Witness was supposed to solve some of this, and it seems to have stretched it out. It seems to have given us a window of relief, but that window may be closing. And before we get into that, I want to discuss exactly here what Blocktivity is measuring, because they're not measuring transactions per second. They're measuring what they call operations on the blockchain. So let's scroll down here where they explain that. Transaction and operation. Blockchains have evolved, and you can now do a variety of operations using this technology. An operation could be a transfer of a coin, but also other actions allowed by the blockchain as updating or creating an asset, voting, posting a blog or comment, claim vesting shares. One transaction could contain several of these operations. As Blocktivity is focused on the activity produced by people and bots on the blockchain, counting transactions would be missing a lot of important actions on the blockchain. As we discover the potential of blockchain technology, these operations will diversify, and blockchains only allowing simple transfer will be things of the past. That's why Blocktivity considers the overall activity, counting the operations, and not the transaction made on the blockchain. So that's what they're doing. I'm not sure for Bitcoin. It's mostly simple transactions, but I suppose there are a few other things that can be done with Bitcoin. perhaps doing what is that? Well, like what MaidSafe and Tether, they use the Bitcoin blockchain as kind of the back end to store their information. They kind of piggyback on. So I'm not sure if doing those kind of transactions with Tether and MaidSafe tokens and other things that are piggybacking on Bitcoin, if that's adding extra load to it. I mean, Tether's pretty big, so Tether itself could be adding a tiny bit of extra load to it. But let's just have a deeper dive into this, because this is really interesting, I think. Is it really reaching another peak here? Oops. So we can see this is from November of 2017 to the present. So it's basically about 11 months. I should have gone 12 months. I don't know why I didn't do that. But you can see here's the big peak back in last December and January, when the Bitcoin blockchain became really bogged down, and the cost of transactions, the transaction fees just went through the roof, and everybody was complaining, and SegWit had been launched, but it was very few people were using it at the time, and so it didn't have much of an effect. But over time, SegWit did help, but also the decline in the market helped a lot, and we went from a $20,000 Bitcoin roughly at its peak down to, I'm not sure what it was in this range, but it was quite a bit lower for sure. Now, since then, we can see you could kind of draw a line here from around this range, from March to April, up to where we are currently, and you can see there is an upward trend again in the Bitcoin transactions per day. That's what this chart is, by the way. I should have said that from the beginning. This is transactions per day on the Bitcoin blockchain. So back here in March to April, you can see we averaged, we ranged anywhere from about 197 all the way down to 171 or so thousand transactions per day, and now we are coming around to about 241 to 231. So it's another range, 220 to 240, 230. So it's radically picked up pace, really. Radically. It's significantly picked up pace over the last few months, and it's steadily doing so. Now, the next thing I want to have a look at here, this is from BitcoinStackExchange.com, and this is a post back in June 23rd of 2016 by Jimmy Song. Now, Jimmy Song's a Bitcoin developer. He's, I think, pretty well known. So he says, best estimates on effective block size with SegWit are 1.6 to 2 megabytes. So Bitcoin has a fixed 1 megabyte block size. They didn't change that. But Segregated Witness took the signature out of the block, effectively, and so more actual information could be packed into a block, so you get a lot more transactions per block, and that increased the total transactions per second that were possible. So he goes on to say, and again, keep the date here in mind, this was back in 2016, before Segregated Witness was implemented. Current transactions per second possible are around 3 transactions per second. Given that the effective increase is 1.6 to 2.0, the transactions per second are also the same multiple, giving us somewhere around 5 to 6 transactions per second. So let's have a look over here. Here's another little nice chart. Percentage of SegWit spending payments. So the number of payments actually being processed that are, I guess, using SegWit nodes is roughly 45.8%. We'll round that up and say 50%. You can see that's grown. It's grown quite steadily since SegWit was implemented. You can see there's this December, January, where we had the big peaks in Bitcoin, where the price went ballistic, and also the transaction fees went ballistic. And SegWit was a pretty minor player around that period, from 10 to 15% in that range. And now we're up to, we're getting closer to 50% now. So 50% would be about somewhere in between 1.6 and 2.0, so 1.8, and also in between here, 5 to 6, about 5.5 transactions per second, right? That's what that's indicating. So it hasn't really quite doubled what Bitcoin was capable of, but I think what we're going to see here, because of this continual increase, is that we're going to reach a point where Bitcoin is once again going to be peaked, going to be pegged, and we're going to see increases in transaction fees on the Bitcoin blockchain over the coming year. And unless they do increase the block size to 2 megabytes, then I think that's what they're facing. I'm not sure that when the Lightning Network is going to go full into effect and how much of an impact that will have. I mean, keep in mind, SegWit it's been a year and there's still only 50% of nodes are really applying it. Same could be true with Lightning Network. I don't know how long that's going to really take to come into effect. Now, the quick solution is obviously to do a hard fork and increase the block size, but Bitcoin Core has been adamantly opposed to that. Well, I wouldn't say they proposed doing it, but I would say the miners in general were opposed, or the community in general was opposed, because they didn't actually follow through and commit to a 2 megabyte block size. And I don't know, the way I hear the Bitcoin Core people talking, it's gold, it's not cash. They repeat over and over and over again, don't spend it, hold it. And it seems like a bit of a broken record. I think they're a bit afraid of this. I think they're a bit afraid of this red zone here and what it could mean. So I would keep your eye out on Bitcoin, because I think this is a potentially big thing for it in the coming year or so. There could be some big things, some more rancor in the ranks. All right, so I've gone on about that long enough. Let's get into the news this week. Top headlines. I'm going to do a top headlines in the first part of the show and just cover some interesting headlines the first part to get a little more information into the weekly show. So, Alibaba files patent for blockchain system that allows administrative intervention. Now, this is a bit of a laugh for me. Chinese e-commerce conglomerate Alibaba has filed a patent application with the U.S. Patent and Trademark Office for a blockchain-based system that allows a third-party administrator to intervene in a smart contract in case of illegal activities. To me, this makes no sense, but, there you go. Alibaba, again, they're one of the big patent trolls in the blockchain space, and they're at it again. Next, we've got IBM awarded patent for secure system based on blockchain. Tech conglomerate IBM has recently been awarded a patent for a blockchain-based secure system. The patent filing was published on U.S. Patent and Trademark Office website Tuesday, October 2nd. As IBM explains in a document first filed September 2017, technology enables the detection of security breaches within a network by connecting all the monitors to a chain configuration which registers all events in the network. This in turn might help prevent different sorts of hacks. Interesting stuff. IBM's always got some good things happening. Clicking the wrong mouse button. Next, major Korean crypto exchange Bithumb to launch global decentralized platform. Lots of decentralized platforms being developed, folks. It's quite interesting. South Korean crypto exchange Bithumb, currently the world's 6th largest by trade volume, will open a global decentralized crypto exchange, Business Korea reports, October 4th. Bithumb has partnered with blockchain firm OneRoot, which has developed an Ethereum-based decentralized token transaction protocol dubbed R1 and already operates a decentralized exchange. According to a joint press release, the protocol separates order matching and order execution, which RNT claims improves security and matching efficiency. So they're not the only ones. Binance is working on one too, and I go with that mouse button again. And Stellar-based zero-fee decentralized crypto exchange StellarX is now fully launched. StellarX, a Stellar-based zero-fee decentralized crypto exchange, has left the beta phase and was fully launched Friday, September 28th. The launch was announced in a blog post by Interstellar, the company behind the platform. The exchange, originally announced in July this year, is based on Stellar's XLM Universal Marketplace. Stellar is an open-source protocol for cryptocurrency to fiat transfers. Its own cryptocurrency, XLM, is currently the 6th largest with a market cap of $4.8 billion, according to CoinMarketCap. So there you go, another decentralized exchange. They're just popping up all over the place. Next, U.S. brokerage firm TD Ameritrade to invest in new crypto exchange. So they're a big brokerage firm. They got a lot of customers. They're going to have a crypto exchange. Retail brokerage firm TD Ameritrade has announced that it is backing new crypto exchange ErisX, according to a press release published on the company's website Wednesday, October 3rd. TD Ameritrade, which currently provides investment services to up to 11 million clients, did not reveal the details of the deal. However, according to Bloomberg, investing company DRW Holdings and high-speed trader Virtue Financial are also participating with investments. Both agreed to be market makers for ErisX, which might help ensure a deep order book, writes Bloomberg. All right, that covers our headlines for the week. Now we're going to get into the main stories. Here. Malta's finance minister says crypto means finance middlemen face the chop. Oh yeah, that's what we want. Financial intermediaries will be facing the chop thanks to Bitcoin. and cryptocurrency, Malta's finance minister told Cointelegraph in an interview Friday, October 5th. Speaking in a private interview during the Malta Blockchain Conference, Delta Summit 2018, Edward Cicluna, if I get his name right, Edward Cicluna, said that the advent of cryptocurrency that is usable by the mass populace was making the middleman of finance go the way of traditional photo developers. Quote, "This is a disruptive technology," he said when asked whether he sees crypto as a future payment method, continuing, "I can see this, just like in photography, when you could tell that those who process the photos are going to lose their jobs. A lot of financial intermediaries will be facing the chop in the not-too-distant future." Cicluna revealed that although he no longer held cryptocurrency himself, he had learned a lot about it early on from his son, who both bought and traded Bitcoin in its early years. Quote, "I think intermediaries have to listen and be attentive. I think that's what the banks are doing now," he continued. Cicluna stopped short of stating that cryptocurrency and blockchain could help prevent another financial crisis in and of itself. "It's a big revolution," he concluded. "The possibilities are endless." The comments come as little surprise on the back of Malta's continued partnerships with the cryptocurrency industry as part of its quest to become the so-called blockchain island. Last week, the country's Prime Minister, Joseph Muscat, continued the official line of support in a speech to the United Nations, during which he called cryptocurrency the inevitable future of money. Well, that's what we believe. That's why we're in it, to win it. Okay, next, Wall Street Journal. Automated trading programs manipulate digital currency prices. Shock! I've been saying this for months and months, folks. Automated trading programs or bots are manipulating digital currency prices on cryptocurrency exchanges, according to a Wall Street Journal report October 2nd. Automated trading software is a program that allows traders to set specific rules for both trade entries and exits, submit orders to a market center or exchange, and then automatically executes them by means of a computer at speeds greater than any human is able. Trading programs are available for traditional and crypto markets and can be deployed for both legitimate and manipulative strategies. Addressing crypto markets, Wall Street Journal cites a lack of proper regulation as the main condition that allows bots to execute abusive strategies on an industrial level. Andy Bromberg, co-founder and president of startup CoinList, told Wall Street Journal that, quote, "This sort of activity is rampant in the market right now. It hurts the market's reputation, and it hurts individual investors." According to the Wall Street Journal, 80 million digital currency hedge fund Virtual Capital uses its own bots on a number of crypto exchanges around the world. Stephen Keen, managing partner of Virtual Capital, told Wall Street Journal that he is in a constant cat-and-mouse game with enemy bots. Per the Wall Street Journal, Virgil lost funds on certain trades in Ethereum earlier this year after a harassing bot targeted the fund. The Wall Street Journal further explained the strategy used by the bot. The bot's strategy was similar to spoofing, a practice in which traders enter fake orders only to cancel them. The tactic, aimed at tricking other investors to buy or sell an asset by falsely signaling there is more supply or demand, was outlawed in U.S. stock and futures markets in 2010. Another example of price manipulation in digital currencies cited by the Wall Street Journal is trader Kjetil Ilertsen, who began trading Bitcoin in 2011. Ilertsen reportedly developed a program called QuatluTrader that was promoted as, quote, the best market manipulation tool in the world of crypto. The idea of the program is to make market manipulation easier by using built-in tools like a special tab called Whale Tools, which executes several abusive strategies. Alertson told the Wall Street Journal that it is pointless to ban manipulation in digital currencies and that it would be more effective to provide manipulation tools to small traders. If everybody can manipulate, then nobody is manipulating. Well, I don't know about that. Small traders can't execute as much volume, can they? You can't ban anything from people who are dedicated to doing something, Alertson told the Wall Street Journal. Notably, similar programs are not permitted on traditional securities exchanges. The New York Stock Exchange regularly monitors operations for illegal trade activities and abusive trading and punishes violators. Last week, the Wall Street Journal reported that nearly $90 million in illicit funds had been funneled through various crypto exchanges, including Shapeshift. Yesterday, Shapeshift founder and CEO Eric Voorhees refuted Wall Street Journal's claims. He stated that the publication had misrepresented the facts, made mistakes in their reporting due to a lack of knowledge of the exchange's operations and blockchain technology, and I'm not really sure what that had to do with the article. But anyway, they tacked it on the end. So, yes, I guess we've all known for some time that this was happening, and there you go. There's the proof in the pudding. The developers of the software themselves have spoken. Our next article: Yale University invested in new $400 million crypto-focused fund. Now, I bring this article into the news this week because I've been speaking about institutional investors getting ready to get into crypto for months and months now. And I've been waiting for some good examples to come up, and here we finally have a nice example. Yale University is an institutional investor, and they've invested $400 million in a crypto-focused fund. Ivy League U.S. University Yale is said to be one of the investors that helped to raise $400 million for a major new cryptocurrency-focused fund. Bloomberg reports October 5th. The fund, dubbed Paradigm, was reportedly created by Coinbase co-founder Fred Ehrsam, former Sequoia Capital partner Matt Huang, and Charles Noyes, formerly of stalwart crypto fund Pantera Capital. Huang was said to have left Sequoia in June to embark on establishing the fund together with Ehrsam, according to reports from the Wall Street Journal at the time. Bloomberg has today cited an anonymous source as saying that Yale, whose $30 billion endowment is reported to be the second largest among U.S. higher education institutions, has made an investment of an undisclosed size in Paradigm. Bloomberg further reports that 60% of Yale's assets for the fiscal year 2019 are earmarked for alternative investments, including venture capital, hedge funds, and leveraged buyouts. According to Bloomberg, the fund reportedly plans to invest in early-stage crypto-focused projects, new blockchains, and digital asset exchanges. This summer, Cointelegraph reported on a group of economists from Yale that created a comprehensive analysis of the risk-return trade-off of major cryptocurrencies such as Bitcoin, Ethereum, and Ripple based on their historical performance data. So there you go, folks. It's not all just rumor and innuendo. It's starting to happen. Yep, wrong button again. Our next article, venture capital investment in blockchain and crypto up 280% in 2018, says report. Traditional venture capital investment in blockchain and crypto firms has almost tripled in the first 3 quarters of 2018, according to a new Dier report published September 30th. Dier cites data from PitchBook that indicates that blockchain and crypto-related firms have raised almost $3.9 billion in venture capital so far this year, a 280% rise as compared with last year. The rise comes not just in terms of an increasing number of deals, but also in the burgeoning median value of each, which has grown by over $1 million this year. There's a nice little chart. It's almost too big for my screen. You can see the rate every year. It's going up, and this year it's gone up a lot. I mean, that's a dramatic increase. VC investment and deal count in blockchain and crypto-related firms 2013 to 2018. So that's from Dier. And we've got this one. Again, 2013 to 2018. It's a VC median blockchain investment. So that's the median range. Again, you can just see wow, that's like it's going exponential there. The combined total of the 10 largest deals in 2018 came to $1.3 billion, with 9 of these representing traditional equity investments rather than purchases of utility crypto tokens. The outlier was the Definity token, which raised a combined $163 million from VC investors Andreessen Horowitz, Hashed, and Polychain Capital. PitchBook's figures revealed that Barry Silbert's digital currency group was by far the most prolific investor from the VC sector, closing over 110 deals in the crypto and blockchain space this year. DCG outflanked both Blockchain Capital and Pantera Capital, whose combined deals clocked in at 100. Other strong investors included VC firms Andreessen Horowitz, Danhua Capital, and Future Perfect Ventures, alongside active angels Tim Draper, Naval Ravikant, and Roger Ver, and Barry Silbert. Beyond these major players, Dier reports that close to 2,000 investors have closed deals with at least one blockchain firm this year. The 50 most active of these have invested in at least 8. In terms of investor profiles, 52% of investors were not exclusively focused on the crypto and blockchain sector, but sealed their deals as part of a more diverse portfolio. Lastly, Dier also analyzed the geographic distribution of the VC capital that flows into blockchain, with U.S.-based investors representing the lion's share at 79%, followed by 12% from China and 2% from South Korea and Singapore, respectively. Dier's new report also includes a section on the phenomenon of new banking operations that aim to facilitate the blockchain industry, whether blockchain-exclusive banks built from the ground up, banks that integrate fiat and crypto services, or the rising number of crypto-related firms that are securing banking licenses. As reported earlier today, South Korea's largest VC firm, Korea Investment Partners, KIP, has invested in its first blockchain startup, one that specializes in harnessing the technology for supply chain management solutions. KIP is known for its investments in high-ranking firms that include Naver, Korea's largest search engine, as well as owner of the popular Japanese messaging app Line, and Korean messaging giant Kakao, among others. So it's just more in line with what we've been seeing this year. Lots more happening. Lots more money coming into the mix. Our next article, And our final one before the discussion, report institutional investors, the largest buyers of crypto transactions over 100K. Institutional investors have replaced high net worth individuals as the biggest buyers of cryptocurrency transactions worth over 100,000. Bloomberg reported October 1st. According to Bloomberg, traditional investors and buyers, such as hedge funds, have become more involved into the 220 billion cryptocurrency market through private transactions. Bloomberg also notes that the miners, the biggest sellers in the market, have begun scheduling regular coin sales instead of holding or offloading them during market rallies. Because the market seems to be evening out and the miners are desperate. Bobby Cho, global head of trading at the Chicago-based cryptocurrency trading unit of DRW Holdings, LLC, Cumberland, told Bloomberg that the Wild West days of crypto are really turning the corner and that the situation demonstrates the professionalization that's happening across the board in this space. One of the biggest criticisms of crypto by institutional investors has been the volatility. Over the last 4 to 6 months, the market has been trading in a very tight range, and that seems to be corresponding with the traditional financial institutions becoming more comfortable diving into the space. I pointed this out in last week's show, and a little bit in this week, earlier in the show, but the volatility is on the decline, I think, and whether that continues, it's hard to say, but it's certainly interesting to see. We'll find out what happens. Hedge funds and miners have reportedly been shifting sales to the over-the-counter market. Per researchers from Digital Assets Research and Tab Group, the OTC market facilitated 250 million to 30 billion in trades per day in April, while recently exchanges have handled about 15 billion in daily trades. Sam Doctor, Managing Director and Head of Data Science at Fundstrat Global Advisors, told Bloomberg that the increasing number of institutional investors entering the market causes more of an imbalance, which makes brokerage firms enter the industry to assist institutional buyers find inventory. Last month, Cointelegraph reported that Bitcoin investors and speculators held their positions over the summer, while markets seem to have become more stable overall. According to a new study by Chainalysis, quote, the market seems to have recalibrated after the entry of so many new market participants with different beliefs and expectations than those who held Bitcoin prior to 2017. Very interesting, very interesting. It's going to be, 2018 is going to be a fascinating year for crypto, I got to say. It's going to be really interesting to watch what happens. Okay, now our discussion article. I don't know how many of you have been following the EOS. They're calling it a scandal in this article. I don't know if it's a scandal or not. I guess if it were proven, absolutely, then maybe. But I guess it's also a bit of a cultural viewpoint. Different people have different views on whether this is scandalous or not. There certainly aren't regulations here, so it's just, I guess, what people feel about it. I think it's not on, but let's get into it first. So the title of the article we're going to discuss is Corrupt Governance? ? What we know about the recent EOS scandal. This week, EOS found itself in hot water after allegations arose that a major part of its blockchain governance, led by Chinese crypto exchange Huobi, may be involved in a corruption scheme. EOS's parent company and Huobi have issued public statements since these allegations, but refrained from admitting or denying the charges. EOS.io is a blockchain-powered smart contracts protocol for the development, hosting, and execution of decentralized applications. It aims to operate in a way similar to the web-based applications, and retains similar structural principles, which makes it comparable to Google's Play Store or Apple's App Store. I don't know exactly. It's exactly comparable. Maybe some comparisons you could make. It's not at that level yet, folks. It's pretty much a very new platform and still undergoing a lot of development. EOS.io is supported by the native cryptocurrency EOS, currently the 5th largest crypto by total market cap. Those tokens could be staked for using network resources either for personal use or leased out for developers' use, as per the project's white paper. DApp developers can build their product on top of the EOS.io protocol and make use of the servers, bandwidth, and computational power of EOS itself. As those resources are distributed equally among EOS cryptocurrency holders, hence, EOS.io attempts to represent a decentralized alternative to cloud hosting services. The EOS.io platform was launched in June 2018 as open source software. Its first test nets and original white paper emerged earlier in 2017. The platform was developed by Block One, a startup registered in the Cayman Islands and led by Daniel Larimer and Brendan Bloomer. EOS holds the absolute record in terms of funds raised during initial coin offerings. ICOs, it has managed to gather around 4.1 billion worth of investments, or about 7.12 million Ethereum, after fundraising for nearly a year. Its predecessor, Messenger Telegram, predecessor, I think it's right. I think the next up in that range was Telegram, had raised less than half this much, 1.7 billion. Some of the writers of these Cointelegraph articles aren't too good. Okay, so who are the block producers? So EOS employs a consensus model called delegated proof of stake. That means that its investors are rewarded with voting power and decide who gets to mine the EOS blockchain. Indeed, the EOS network is constantly governed by a total of 21 block producers. Those are decentralized bodies who produce the blocks of EOS on the EOS blockchain just like the miners do with Bitcoin's blockchain. In reward, block producers earn EOS tokens produced by inflation. The total inflation of EOS tokens is reportedly 5%, only 1% of which goes to block producers. While block producers have the option to keep the tokens, they are also encouraged to reinvest them to create better infrastructure growth, better community and financial support, along with better education on the EOS network and EOS dApps, as blockchain analyst and tool builder Ben Sigmund explains in Medium post. There's a link there in the article if you want to check out the article, which is going to be linked in the show notes. So, what does mutual voting mean? The nuances of blockchain governance. Block producers are elected through the voting system since June of 2018 when the mainnet went online. EOS's total supply is set at 1 billion and the EOS main platform was fully activated or handed over to the community when 15% of total circulating supply had voted. That occurred on June 14th when 21 EOS block producers primarily from the US, China, and South America came ahead in the voting race. The voting process with EOS is constant. That means that the top 21 is fluid, and block producer candidates who earn enough votes can replace the block producers in power at any minute. The supposedly democratic voting system soon showed its flaws, though. For instance, cryptocurrency exchange Bitfinex secured its position as a block producer allegedly due to the votes of just a few EOS holders, one of which accounted for 27% of all votes for Bitfinex, as community members pointed out on Reddit. Mutual voting, in turn, would imply a process when block producers are voting for each other in order to remain in power and keep their passive income. According to some estimations, the top 3 EOS block producers earn around 1,000 EOS per day. That process violates Article 4 of the current EOS Constitution, titled No Vote Buying, which states the following: no member shall offer nor accept anything of value in exchange for a vote of any type, nor shall any member unduly influence the vote of another. Now, I'm not sure what the point of a constitution is if you don't really have teeth to enforce it. I'm not sure what kind of enforcement there really is for this sort of thing, but yeah, well, we'll have to follow and see what happens there. So I'll continue. Moreover, the EOS voting system seems to be designed for casual users who vote with their private wallets, whilst investors who have their EOS tokens on exchanges wallets appear to be stripped off of their voting rights. Instead, they are passed over to the exchanges who hold their tokens. While Bitfinex has attempted to introduce a scheme that would allow its customers holding EOS to participate in the voting, other exchanges have remained inactive on the matter. The problem was recently discussed by members of the Chinese EOS community, who argued whether exchanges should be allowed to vote with customer funds. As per the meeting notes posted in English, general consensus was mixed between yes and no, but favored yes with the caveat that all voter participation must be increased and exchanges should be expected to provide greater transparency to their voting selection process. So here are the allegations of this conspiracy. Say the allegations: geopolitical conspiracy. The allegations were originally raised by EOS One, a non-profit supervisor of block producers and builder of EOS ecosystem who regularly reports on block producers' activities. On September 26, EOS One posted what it claims was an Excel spreadsheet of the large Chinese cryptocurrency exchange Huobi, currently the 5th largest exchange by reported volume globally per coin market cap, that was allegedly leaked by its former employee Shi Feifei. The supposedly leaked document includes 4 tables with titles Node Mutual Voting Table and Node Income Statement among them. EOS One implied that chief EOS block producers, including Huobi, which is both the fourth largest block producer in current producer ranking, according to sorry, I'm reading that wrong. EOS One implied that chief EOS block producers, including Huobi, which is the 4th largest block producer in current producer ranking, according to EOS Titan data, were involved in mutual voting along with payoffs. Payoffs! According to the explanation of Twitter user and EOS investor Maple Leaf Capital, who summarized the document's findings in English, Huobi voted for 20 other block producers, and 16 of them voted back for Huobi. Moreover, Huobi allegedly voted for 3 other block producers in exchange for significant paybacks. Huobi votes for EOS IOSG 11111, Co-Chain World, and EOS Space IO EOS in exchange for 170, 150, and 50% of the returns, respectively. Oh, so it's not just a payback; it's returns on what they earn. I guess that's pretty hardcore. Maple Leaf Capital also argued that such agreements could increasingly compromise the integrity of the network, noting that at least 12 of 21 major block producers were controlled by Chinese entities. Quote, this file documents the collusion, mutual voting, and payoffs that occur amongst the Chinese block producer community. Thus, Maple Leaf Capital essentially accused a number of Chinese companies of forming a cartel to collude together, adding, quote, I view such action with utter disgust, and there is a reason why our Maple Leaf proxy only votes for a very selective group of Chinese block producers, end quote. Furthermore, the Twitter user linked the alleged mutual voting with the recent promotion of Huobi Pool token, which shared tokens with users in exchange for locking their EOS on Huobi. The Chinese crypto exchange might then capitalize those votes, Maple Leaf concluded. So, what does Block 1 have to say? EOS response, neither confirmed nor denied. On October 1st, Block 1's CEO, Brendan Bloomer, published a statement addressing EOS public blockchain governance problem. In it, he neither confirmed nor denied the allegations, stating his company is aware of some unverified claims regarding irregular block producer voting and the subsequent denials of those claims. Without specifying which denials of allegations he referred to, Bloomer stated that EOS will continue to, quote, ensure a free and democratic election process and vote with other holders to reinforce the integrity of this process. Quote, we continue working on our potential involvement with the goal of empowering the intent of the greater community through a transparent process that incorporates community feedback. Well, there you go. So what does Huobi say? Huobi's response, investigation is required. On October 2nd, Huobi responded to the accusations. In a brief statement, the exchange said an investigation into the allegations was still ongoing. Based on the initial investigation, there were no financial contracts involved between Huobi and any third party. The investigation is still ongoing, and therefore we seek your patience and cooperation in this matter. Well, of course, not having a financial contract isn't, at least not a written one. You don't really need that. You just need a really bit of a wink, wink, and a handshake. That's what often happens in these arrangements. And if somebody does you wrong, then you do them wrong next time around. Previously, on September 26th, Danny Wu, senior manager at Huobi Pool, defended against the allegations on Telegram, claiming that the document in question was faked by their former employee. Okay, so now we get on to the community backlash, and of course, Vitalik Buterin has to jump in as well. the founder of Ethereum, one of the competitors to EOS, comes in with a good "I told you so." So, expectedly, the alleged Huobi spreadsheet provoked a major backlash in the EOS community and beyond. EOS Alliance, a non-profit organization formed by the EOS community members and block producers with the role to facilitate the dialogue within community, has released a statement on the situation. Quote, Dan Larimer's delegated proof of stake was designed with the requirement that 15 of 21 independent votes are required to operate the network securely. If, as some alleged recently, some current block producers are coordinating together, this might call into question the transactional reliability of the EOS blockchain data for all users and the attractiveness of EOS as a platform for DApps. Let that sink in. That's a big slap in the face. That's what that is. And that's not coming from an outsider. That is the EOS Alliance, a group of EOS community members and block producers who are saying this. That's pretty hardcore. I mean, I really hope that Block 1 and Dan Larimer listen carefully here and try to find a solution, because this is very troubling for a lot of people. I mean, obviously some people don't see it as a big problem, but a lot of people do, and it's going to be a big heavy weight on EOS's ability to perform down the track if something isn't done to ease the concerns of people in the community. So I will continue. Additionally, EOS Alliance stressed that, quote, there are geopolitical considerations given that Chinese corporations and investors are potentially being demonized, and the consequences in China might be more dire for the individuals involved than they would be in other countries. The community's reaction on EOS's official Reddit channel seemed mixed. Quote, I don't find that surprising given the government's model of EOS, end quote, wrote user Behitic. Quote, if you optimize your system under the assumption that most players aren't malicious and thus reduce the number of nodes for more transactions per second, such an outcome like this was likely. Ethereum co-founder Vitalik Buterin commented on the aforementioned thread started by Maple Leaf Capital, arguing the vote trading was, quote, completely predictable, end quote. Oh, here's the full quote, I guess. Quote, interesting. I mean, it was completely predictable, and I did predict it, but I did not expect it to happen so thoroughly and so soon, end quote. Buterin also criticized the very system of EOS nodes. Quote, as a follow-up, this is why I do not believe in coinholder-voted on-chain treasuries. Any chain where coinholder-voted on-chain issuance is used to supposedly fund public goods can easily collapse into this kind of I vote for your crappy project, you vote for mine equilibrium. End quote. Interestingly, the Ethereum co-founder has criticized the EOS voting system before. In August 2017, Buterin clashed with EOS Daniel Larimer after he responded to an Ethereum Reddit thread post claiming that EOS was superior to Ethereum in terms of number of transactions and flexibility. In his comment, Buterin mentioned that EOS's reliance on voting, among other features, is problematic, and the scenarios where exchanges would vote on users' behalf, with users not really caring how exchanges vote with their money, were likely to happen. So there you go. There's the proof that Buterin did predict this. But, I mean, what Daniel Larimer said is also true. EOS does handle more transactions per second by far, and it is more flexible. So both statements are true, but you know, in the end, I guess people are going to have to make up their own mind about how they feel about investing in whatever platform they're interested in. Alright, so that's all I've got for the news this week. On that, let's get on to the general news anyway. Let's get on to the Safe Network development update for October 4th, when it came out. So the highlights. Last week, the routing team finished implementing dynamic membership, and this week they started to focus on detecting and handling malice. So that is a big, awesome news. Big clap of the hands for the team for getting that finished off. Next highlight, Doug Campbell gave an interview to the new CryptoQuest podcast. I had a listen. It's quite thorough. The interviewer asked a lot of really good questions. He seemed to know what he was talking about. And Doug Campbell hung in there and did his best. And I reckon have a listen to that if you want to get some more background on what's going on with the development with the Safe Network. It's not so much about the development; it's more about just the network in general. But it's a thorough look at it. So next highlight. MaidSafe provided comments to the news website Verdict for a news article that investigated the viability of blockchain-based social media alternatives. I have not read that yet. I intended to, and then I got too busy with other things. But I'll have a look, and if I find it really interesting, I may report on that next week. Our next highlight, Shiram2301, that's a user on the Safe Network forum, joined MaidSafe this week. He is based in the Chennai office. It's in India and is working with the front-end team. And lastly, we have a new Rust engineer starting in the next few weeks based in Ayr, Scotland. So, yeah, I'm not going to read through the details. This has already been a long show, but they've broken down, as usual, they got the update broken down into marketing section, recruitment section. They've got a lot of details there. Safe API and apps, got a big section there. Safe client libraries, they've got a big section there. And routing and Crust, more big sections there. So a lot of things happening. A lot of things happened this week. Please do check the link in the show notes or go to the Safe Network forum and go straight to the dev update and read it yourself. There is so much activity over there. It's great. So, let's wrap this up. That's all I have for this week. I'd like to thank all my viewers for joining the show today. We Hope you found the episode informative and helpful. Please subscribe, like, comment, and share our video with others, and tune in next week for another interesting episode.